One of the biggest misconceptions that fee-for-service somehow means no insurance headaches at all.
The majority of practices in the U.S. are PPO-based or PPO dominant. So understanding PPOs is not optional, it's foundational.
It's okay if you don't love insurance, but you still need to understand it.
Disliking insurance doesn't protect you from it. Knowledge does.
Dentistry trains us to fear those empty chairs, but sometimes empty chairs are a symptom of a deeper problem.
And that's why insurance decisions shouldn't be emotional. They really need to be strategic. Walking away feels scary because you're worried about losing patients, but staying in a bad contract quietly bleeds you over time.
All right, welcome back to Project Confidence. I'm Dr. Diana Nguyen.
And I'm Dr. Amrita Patel.
Today's episode is one we've been getting asked for constantly, especially by fourth years, residents, and new grads who are about to sign their first contracts and suddenly realize nobody actually taught us dental insurance.
So today's episode is called Benefits Breakdown, Dental Insurance Decoded for New Grads. And if you've ever thought, I don't know what questions I'm supposed to ask about insurance, this episode is for you.
Before we dive in, Amrita, let's set the stage for why you are the perfect person to answer these questions. You've served on the American Dental Association Committee on Dental Benefits, and you also run multiple practices in the Metro New York area, dealing with insurance companies every single day from both the clinical and the business side.
That's right. I've been in the trenches for a while, especially with all the communities that we serve in our areas and different plans and benefits that patients have.
So you're not just talking theory, you're actually living this.
Yep.
Now, let's start very directly. Do your practices take insurance or are they fee-for-service?
We do take some insurance, but they are PPO plans, preferred provider organizations. These are usually the insurances that large companies offer to their employees. We do have a fair share of patients with no insurance, too.
For new grads who hear the term all the time but may not fully understand it, can you explain what a fee-for-service practice actually is in plain language?
A fee-for-service practice is one that has not signed any insurance contracts and is able to charge their usual fee to all patients. Now, that does not mean that these practices won't accept a check from the insurance company. And that's where this label can be so misleading to people. One of the reasons that practice buyers and new grads like fee-for-service practices is because they assume that there's no billing or dealing with insurance companies involved, and that's just not the case.
I'm really glad you said that because I think that's one of the biggest misconceptions, that fee-for-service somehow means no insurance headaches at all.
Exactly. Fee-for-service just means you don't have a contract with the insurance company. It doesn't mean insurance disappears from your life. Patients still have insurance. They still want to use it, and someone in your office still has to submit claims, answer questions, and explain benefits.
So when people say, I want to be fee-for-service so I don't have to deal with insurance, what they're really saying is,
I don't want an insurance company telling me what I can charge. But the administrative work, that doesn't magically just disappear. You still have to verify benefits, submit claims, post payments, deal with denials, unless you're running a very niche boutique practice that's cash only and willing to turn patients away.
which is not most practices.
Exactly, especially not for new grads and honestly, not even for a lot of us seasoned owners.
I think this is where new dentists get tripped up because fee-for-service sounds like freedom, and it can be, but it's not the same as insurance-free.
Right, it's more like insurance optional, not insurance absent.
So let me ask you this. When a patient comes into a fee-for-service practice and they do have insurance, what usually happens?
Typically, the patient pays the practice's full fee at the time of service, and the practice submits a claim on the patient's behalf. The insurance company sends the reimbursement to either the patient or the office, depending on how it's set up.
And that reimbursement is based on the insurance company's allowed fee, not the dentist's fee.
Correct. And that's another place where confusion happens. Patients assume that because you're fee-for-service, insurance will cover everything, but insurance is still reimbursed based on their fee schedule and not yours.
So the patient might still have a pretty significant balance, even in your fee-for-service model.
Right, and that's why communication is so critical. Fee-for-service practices often need stronger front desk and financial conversations, not weaker ones.
I love that you said that because people assume the opposite, that fee-for-service is somehow going to be simpler.
In some ways it's simpler, but in other ways it's actually more demanding. You're asking patients to understand value and not just coverage.
That's a good way to put it. So let's contrast that for a second. You said your practices take PPOs. Why PPOs specifically?
PPOs have, I guess, kind of a balance. You get access to a larger patient pool, especially patients coming from large employers, but you're not locked into the same level of restrictions that you see with an HMO insurance plan.
And for new grads who are listening, especially associates, this matters because most of the practice they're joining are probably PPO heavy.
Yep, the majority of practices in the U.S. are PPO-based or PPO dominant. So understanding understanding PPOs is not optional, it's foundational.
And just to say this out loud, it's okay if you don't love insurance, but you still need to understand it.
100%. Disliking insurance doesn't protect you from it. Knowledge does.
So if you're a new grad and you're hearing fee for service as this ultimate end goal, what would you want them to understand before they put that on a pedestal?
I'd want them to understand that fee-for-service works best when you already have a loyal patient base, strong systems in place, clear communication, and confidence in your clinical and leadership skills. It's not usually where you start. It's often where you evolve to.
That's such a relief to hear, honestly, because I think a lot of new grads feel behind because they're not chasing that model right out of the gate.
And they shouldn't. There's no moral superiority in being fee-for-service. It's just a business model, one of a lot of them.
Okay, I love this foundation we just built. Now that we've clarified what fee-for-service actually is and what it isn't, I want to zoom out and talk about how common these models actually are in the real world. Instagram makes it seem like everyone is fee-for-service. Roughly speaking, what percentage of practices in the US are fee-for-service, PPO and HMO? And how does that breakdown actually look in most markets?
Yes, let's demystify this myth that every dentist is totally fee-for-service and doesn't accept insurance at all. Data shows that most dentists are a network with at least 3 dental benefit plans, PPOs usually.
Okay, so then what does that mean for the practice owner?
Well, it means that they've, 1, agreed to see all patients with a certain plan, 2, they've agreed to charge these patients the fees that the plan allows only, and 3, they agree to abide by all the rules, pages and pages of rules that the plan requires.
Wouldn't that make insurance a huge driver of patient care?
You think that, Diana, but actually the data shows that only about 3% of patients max out or use all their dental benefits in 1 year.
So then what's happening with the rest of the patients that are going to the dentist?
Well, what I see more and more is that patients are actually opting to use in-office membership plans over paying for dental insurance through their jobs because the actual coverage patterns are basically unchanged from the 1970s.
This is such good information. I definitely didn't know this at the start of my career.
Did you know that if you work at an office that is in network with dental insurance, but then you also work at one that's totally fee-for-service, you will appear on the insurance website when patients are searching at the fee-for-service practice as well, and you might not realize this, that you've been credentialed this way until that fee-for-service office starts receiving checks at the reduced insurance fee.
No way. All right, let's talk about terminology that gets thrown around a lot. What does it actually mean to be in network versus out of network with an insurance? And then from a patient perspective versus a provider perspective, what's the real difference?
Okay, so an in-network provider has signed a contract with an insurance company to accept the contracted fees and not charge the office usual fees, see all patients with that plan, and abide by the rules. So keep in mind that those rules can be literally a gigantic stack of papers, and the fees are usually buried in an addendum at the very end.
And so how does that differ from being out of network?
Well, an out-of-network provider has not signed that agreement. So the real difference is that patients who try to find you on their insurance website will not be able to find you if you haven't signed that contract. And you can charge your full office fees if you are out of network. Like I said before, though, just because an office is fee-for-service doesn't mean that they don't still bill patients or accept insurance checks. That's why that term, I think, is so misleading.
Okay, now let's break this down clearly. Can you explain the difference between a PPO and an HMO? Specifically, how they reimburse, how treatment decisions are impacted, and why many dentists feel very differently about these two models.
Okay, so we talked about what PPO stands for. Here's how it works. Patients have an annual maximum of somewhere between $1,000 to $2,000 a year, right? That is the maximum the plan will ever pay out in a year. They usually have a deductible of around $50. The plan dictates what percentage of the plan's fees they will cover procedures at. So then the difference becomes the patient's responsibility. Remember what I said, though. They'll only cover their percentage up to the annual maximum. So it doesn't matter if someone has, let's say, implant coverage. If they've used up that annual allotment of $1,000 to $2,000, the insurance won't cover anything in that case. So usually major procedures like surgery or endodontics are covered at around 50%, and restorative or preventative procedures are covered at, let's say, 60 to 80%. So let's take someone that needs a molar root canal. Your office's usual fee is $2,000. The negotiated PPO contract fee is $1,000, and the insurance pays 50% of that, assuming a patient hasn't maxed out. That would mean that patient's copay is $500.
My head is just spinning from all of this mental math.
So let's talk about how HMOs differ from that a bit. HMOs assign a roster of patients to your office. Every month, you receive a check of somewhere between $3 to $5 a patient, regardless of whether they show up or not. If they do show up, you must treat them, and their copays are low.
How low?
Really low. I'm talking, I've seen HMO checks where the copay is less than the postage stamp on the letter it came in. For that same molar endo situation I described above, a specialist copay for an HMO patient in our area is probably around $200 if you're lucky.
So, are there situations where HMOs do make sense, or are they generally something new grads should be really cautious about?
As a new grad being paid a percentage of adjusted production or collection, I'd say be very cautious.
So, it's the exact same work done by the same doctor, same materials, same standard of care, and everything, but a literal difference of hundreds or even thousands of dollars if you're taking an HMO?
Exactly.
So, then how is anyone taking an HMO ever expected to cover their overhead expenses, let alone make a profit?
That's the million-dollar question, and the short answer is most offices can't, at least not in the traditional way we think about profitability. I think they just kind of sit there and hope that patients don't always show up, because remember, they're getting paid whether they show up or not.
Which is wild because when you're in dental school, you're taught one standard of care. You're not taught HMO dentistry versus non-HMO dentistry.
Exactly. The clinical expectations don't change, but the economics absolutely do. So offices that take HMOs usually have to redesign their entire business model just to survive.
So what does that actually look like in practice?
It usually means very high volume, extremely tight scheduling, lower staffing ratios, and an often heavy reliance on hygiene to keep the practice afloat. You're making it work on pennies per patient. So it's the only way to survive is to scale.
So it's not that the dentistry is cheaper, it's that the time per patient is cheaper.
Exactly. You're compressing time, and that's where the stress comes in for the dentist, the team, and sometimes the patient.
And that has to have downstream effects on burnout, turnover, and quality of life.
Absolutely. And this is why HMOs tend to attract either very large corporate entities that can absorb thin margins or offices that are willing to accept a very different pace and style of practice.
This is an important reality check for new grads because a lot of them think, well, I'll just work harder.
And that's the trap. You can't outwork bad math.
So when new grads are offered associate jobs in HMO-heavy practices and told, don't worry, you'll make it up in volume, what should they be thinking?
They should be asking very specific questions. How many patients per day? What procedures am I expected to do? What's the support staff like? And how am I being paid? Am I being paid a per diem, percentage, or something else?
Because if you're being paid on production, but then the reimbursement is that low,
then you're essentially being asked to grind all day and get next to nothing for it.
And that's where that self-sabotage can start early in a career before you even realize it.
Exactly. HMOs aren't inherently bad, but they're rarely neutral. They require eyes wide open decision making.
I love that you're saying that because this isn't about fear-mongering, it's about informed consent for the dentists.
That's a really great way to put it, actually.
Talk to me about when you were building or acquiring your practices. How did you decide which insurances to take and which ones not to? And then which factors mattered most?
So our practices were all acquisitions, so they were already in network with some plans. What we did do, though, was analyze where our patients were coming from, how many patients we were seeing from these different plans, and which plans made sense to stay in network with, and which plans we wanted to either negotiate fees with or drop entirely.
So what advice would you give to someone who's thinking about signing up with some insurances but doesn't know which ones to choose?
I would say a smart way to go about this is to see what plans the larger companies in your area are offering to their employees, and then ask for fee schedules for those plans and decide if they fit in with your practice and business models.
I love that advice, and I want to underscore it with a real example from my own career because I experienced this firsthand as an associate. So when I was in private practice in San Diego, I was working at an office where, like almost overnight, Amazon just opened this huge tech hub practically across the street. And I remember the owner was so excited about this. And one of the first things that she did was figure out exactly what insurance plans Amazon offered their employees.
That makes total sense.
She also did something really strategic. She looked at their typical office hours. So when did they start work? When did they usually take lunch? And when did they get off? And she actually adjusted our office hours so that we could see these Amazon employees before work, during lunch, and after work. And she made sure that we were in network with the plans that Amazon employees had because the thinking was, this is a built-in patient base.
On paper, sounds like a great move.
Exactly. On paper, it looked brilliant. But here's the part that didn't get fully evaluated, or maybe it just couldn't be predicted. The majority of the people working there were highly educated, early career professionals. So I'm talking software engineers, financial analysts, product managers in their mid-20s to early 30s, fresh out of undergrad or grad school. And they were paying off student loans and trying to save for a house and thinking about starting families.
So very cost conscious.
Very. And clinically, they were also pretty healthy because most of them had been going to the dentist, pretty regularly growing up. And then there wasn't this massive need for, implants and full mouth rehab or multiple tooth replacement yet. And even though the practice wanted to do cosmetic dentistry, veneers and elective procedures, these patients just weren't in a place financially or psychologically to spend money on those services.
And that's such an important point. Demographics matter just as much as insurance.
Exactly. We did everything right from an insurance and access standpoint, but the patient population's needs and priorities didn't match the treatment mix that the practice was hoping for.
But there was probably still enough like simple bread and butter dentistry, right?
Yeah, they were coming in for their 6-month prophies and checkups, and they were always interested in teeth whitening and Invisalign. And their flexible work structures meant that if we had a cancellation on our schedule, we could text them right away and be like, hey, did you want to come in for that night guard impression? It'll take 15 minutes. And they'd be like, oh, yeah, sure. My next meeting isn't for another hour, so I could be there in 5 minutes.
That's a huge plus.
Yeah. And then I experienced the opposite situation when I worked at an office that was located on a military base, and they took TRICARE, the insurance plan that military dependents get, which compared to other insurances does not have great reimbursement rates, but the patient population there was completely different. So most of the patients were military dependents, young wives mostly, but of course some men who had just married Marines or sailors, a lot of them caring for young kids while their partners were deployed overseas and serving our country.
Totally different needs.
Completely. So these families suddenly had access to dental benefits and some financial stability, often for the first time. And many of them came from parts of the Midwest or the South where the water wasn't fluoridated and access to dental care had been really limited. So clinically, there was a lot of work to do, like restorative care and pediatric dentistry and tooth replacement, ortho consults, you name it.
And they were motivated.
Super motivated. These moms wanted their kids taken care of while dad was overseas, and they wanted to get things done. I even had a lot of military wives who were like, let's get my smile perfect for when my man comes home.
I love that.
Yeah, they showed up, they followed through, and they valued the care. So even though the reimbursement per procedure wasn't great, the case acceptance and the volume were strong, and the work really felt meaningful.
That's such a perfect illustration of why insurance decisions cannot be made in a vacuum.
Exactly. It's not just what insurance you take, it's who that insurance represents in your community.
And that's why I always tell people you have to look at payer mix and the patient mix together. One without the other is incomplete.
Which brings us back to what you said earlier about analyzing where patients are actually coming from, not just what sounds good strategically.
Yep, data plus context always.
So for someone listening who's thinking, okay, I'll just sign up for whatever the biggest employer in my area offers, the takeaway is pause, look at who those employees actually are, where they are in their lives, and what kind of dentistry they realistically want and can afford.
That's the difference between a smart insurance decision and an expensive assumption.
Okay, this is a big one. Let's say a dentist buys a practice that's in network with a ton of insurances, and they want to start dropping some of them. How easy or hard is it to actually drop an insurance, and what does that process look like?
So it's relatively straightforward, except there's a lot of planning involved. You notify the insurance company, who will usually tell you that there's a 90 to 180-day period that you've got until you're out of network. The planning is in the prep work leading up to the actual drop date, though. You need to communicate to your patients what's happening, why it's happening, and what went into this decision. You know, often you'll find patients that don't even realize that they have out-of-network benefits. That means their PPO plan pays some percentage to doctors that aren't signed up with them, but it will be a lesser percentage, perhaps 30% for that molar endo instead of 50%. But then some patients are actually paying more from their paychecks to have dental insurance than if they just signed up with the office's in-house membership plan. So I would say to start educating your patients via your team, with your team, probably at least one recall cycle before you make this decision.
And then who do you have to notify and when? And then how do you explain that change to patients without completely blowing up trust or retention?
Well, we sent letters and then had in-person conversations at the recall appointment. We also sent video clips, and if they were patients that were in active treatment, the doctor who was treating them had the conversation with them too. That way it got repeated a few times.
So what are some common mistakes that people make? And what's the patient response usually like?
Not doing all of the prep work I described, it's a lot, but if planned correctly, it can be done. Also, don't take it personally if a patient leaves because of finances. I've found that many patients return for the experience. There really isn't a dollar value for how you make people feel.
Everyone just hears, just renegotiate your fees. How realistic is that actually? Can you walk us through how often do insurance companies renegotiate and what leverage does a dentist really have?
It's like trying to shove the Titanic. Basically, they make it really, really hard. Your only leverage is to threaten to drop, and they will sometimes negotiate with you. This is why it's so important to have a professional review your contract before you sign.
And at what point does it then make sense to walk away instead of staying in a bad contract?
I would say no negotiations, no fee increases year over year, a low number of patients coming to you from that plan.
That Titanic analogy is painfully accurate. When you say threaten to drop, then what does that actually look like in real life? Is it a phone call, a letter, a formal notice?
Usually it starts with a formal written request, sometimes through a provider relations portal, sometimes by certified letter asking for a fee review. And then you wait and follow up. And and often hear nothing.
So it's not exactly a collaborative process then.
Not at all. These companies are huge. You're one provider in a massive network. Unless you're in a rural area or a very underserved market, you don't really have a lot of negotiating.
That's so important to know because I think new grads here renegotiate and imagine this back and forth conversation where both sides are motivated.
Right, and that's just not how it works. Most insurance companies are perfectly happy to let you walk because there's usually another provider nearby willing to take your place.
So when you're looking at whether to stay or to go, you mentioned no negotiations, no annual fee increases, and low patient volume from that plan. Are there any other red flags?
Totally. The big one, another big one, is administrative burden. If a plan requires tons of documentation, frequent denials, delays in payment, that's a hidden cost. Even if the fee looks okay on paper, the time and staff resources it takes to collect that money can make it not worth it.
That's a good point because overhead isn't just materials and rent, it's people and time.
Exactly. And another red flag is when reimbursement rates haven't kept pace with inflation or rising overhead. If your costs are going up every year, but your fees are frozen, or worse, they're decreasing, that's not sustainable.
So then at some point, staying becomes more expensive than leaving.
Yep, and that's the mental shift owners have to make. Walking away feels scary because you're worried about losing patients, but staying in a bad contract quietly bleeds you over time.
That slow bleed is probably harder to see, but then way more dangerous.
Exactly. And when people finally do the math, they're often shocked at how much money they've left on the table by holding on too long.
What would you say to a dentist, especially a newer owner, who's afraid that dropping a plan will completely tank their practice?
I'd say two things. First, communicate early and clearly with patients. Second, understand that not all patients will leave, and the ones who stay often value you more than you expect.
And the patients who leave were often the least profitable ones to begin with, right?
Right. It sounds harsh, but it's true. Losing unprofitable volume can actually make room for better care, better experiences, and better margins.
This is such an important reframe because dentistry trains us to fear those empty chairs. But sometimes empty chairs are a symptom of a deeper problem.
Exactly. And that's why insurance decisions shouldn't be emotional. They really need to be strategic.
Now let's talk specifically to associates because this is where things get tricky. If you're an associate joining a practice that's already in network with certain insurances, and then they want you to credential as an in-network provider too, should you? What are the pros and cons of signing up as an associate?
Well, if it's a practice that accepts PPO plans, you may have to sign up as a condition of employment. This is why it's so important to ask the question at your interview. Ask what plans the office is in network with, but also ask the average reimbursement for your 5 to 10 most commonly done procedures. That'll give you a good gauge of what you'll get paid.
What if you're going to be working at multiple practices and one of them is fee-for-service?
If that's the case, just remember that your insurance status will probably follow you. What that means is that if you're in network with a plan at my office and then you work somewhere that doesn't take any insurances, when patients look you up on the insurance company website, you will show as in network, and sometimes you won't even realize this has happened until the fee-for-service practice starts receiving checks from the company.
What's something associates need to know if they're new to the practice and need to get in network with insurances?
I'd say make sure you have a daily guarantee or a minimum for at least 3 months. This covers you while the office is credentialing you with insurances. You will technically be out of network for all plans until this happens. However, most do have out-of-network benefits, so patients of the practice can still see you. Their insurance will just pay a reduced amount to do so.
What if the insurance would rather be fee-for-service, but the practice is insurance-based? Is it possible to ask to stay fee-for-service if you're a 1099?
That's something to discuss at your interview. It may not be feasible with the practice model, and while we're on the subject, even though I am not an employment attorney, I am qualified enough to tell you that most dentists should not be classified as 1099, but that's a topic for a future episode.
And now, what if the rest of the office is fee-for-service, but they want you to be in network just to bring the patients in? What should associates be thinking about in that kind of scenario?
This is a hard one, I think, and depending on the patient base and mix of insurances, it might not be possible. Something that a lot of people don't know is that the ADA has a contract analysis service that if you send your contract in via your state dental association prior to signing it, you probably will get it reviewed for $0 and they'll pick out possible red flags.
Wait, free legal services and contract review? How did I not know about that? Do you have to be an ADA member to access this resource?
You do. It's one of the best perks of your membership dues.
I'm an ADA member and I didn't even know this existed. I seriously need to take a closer look at those member benefits.
We'll get into that into a future episode, don't you worry.
Okay, here's a very specific situation that we do hear about all the time. Let's say the owner or senior doctors are in network at a premier level that offers higher reimbursement rates for procedures, but then they want the new associate to sign up for the basic PPO because that's all that's offered. What does that actually mean financially and legally for the associate? And is that a common setup and is it fair?
So it's common because a specific insurance company that does this, and there's really only one, but we're not naming names, usually doesn't credential new providers at premier levels.
Is this a universal practice that's happening all over the country?
It only happens in some states and in some cases. But for example, we looked at some practices in Arizona and were told that there was no way we could get credentialed at Premier, despite the fact that my husband was on this insurance's board in his state and neither of us are new dentists. This is also very important during the sale of a practice because the delta between regular fees and Premier fees is often 30 to 40%, and that drastically and directly affects your collection abilities versus the owners.
Okay, now let's talk about a situation that makes a lot of people uncomfortable, but it actually happens more often than you think. What if the practice asks the associate to bill under another provider's Premier number to get that higher reimbursement, and they just promise to pay the associate what they're owed later? What are the risks here?
That is insurance fraud and very illegal.
So what should an associate do if they're put in this position?
Run. Just kidding. I'd ask these questions at the interview, but also I would directly bring it up with the owner if this happens after the fact. And if it keeps happening because, hey, maybe it was a mistake that something got billed under a different provider once, then that practice is not the place for you.
Last scenario. This one is for our academic folks. So if you're teaching at a dental school that accepts Medicaid or some other policy that you aren't in network with at your own private practice or wherever else that you work, and they ask you to credential as a Medicaid provider, but you don't want to be listed as a Medicaid provider long term, how can you do it so that Medicaid patients don't go and find you on the Medicaid provider search engine and then come to your own office thinking that they can get treatment there?
This generally shouldn't be happening because you'd only be credentialed at the dental school's address and not your office address. I haven't heard of that being a problem for my friends who own their own practices and work at FQs or dental schools. But just to cover all your base, I would strongly recommend training your front office staff really well at your own office to screen these calls.
That's really reassuring to hear because I think there's a lot of anxiety around this, especially for people who are early in their careers and they're trying to be really intentional about their payer mix.
Totally. And I think that some of that anxiety comes from not understanding how credentialing actually works. Credentialing is usually site-specific, not provider-wide across your entire professional life.
So just because you're credentialed somewhere doesn't mean that you're automatically credentialed everywhere.
Exactly. You're credentialed to render services at that location under that organization's tax ID and address. That doesn't mean Medicaid or any other plan can just follow you wherever you go.
That distinction alone probably lowered a lot of people's blood pressure right there.
It should. And the other thing I always tell people is don't assume something is happening, verify. Insurance portals are not mysterious black boxes. You can log in and kind of look online and see where you're listed.
So this is one of those situations where being proactive beats being anxious.
100%. If you check once or twice a year, you'll catch any issues early. And if something looks off, it's usually fixable with a phone call or an email.
And looping in the school's billing department early is key. They deal with this all the time. You're not going to be the first faculty member to ask, and you won't be the last. So this is actually very normal in academic and safety net settings.
Correct.
I also love what you said earlier about front office training because even with everything done correctly, patients will sometimes just try.
They will. They might be a dental school patient who felt really comfortable having you supervise a student in the school clinic, and they'll just Google your name, find out where your private office is, and try to go see you on their own, and they won't realize that you don't take their insurance. So having a front desk that knows how to explain kindly and clearly, we're so sorry, but we don't accept that plan at this location is huge.
So the big takeaway here for our academic folks is teaching at a school or working at an FQHC that accepts Medicaid does not mean that you're committing to that payer forever, and it doesn't have to follow you into your private practice life.
Correct. You can contribute meaningfully in those settings and still maintain control over your private practice model.
That's such an important point because we don't want fear around insurance to stop people from teaching and mentoring and serving in these really critical roles.
Exactly. Dentistry needs clinicians in academic and public health spaces. The system allows for that flexibility. You just need to understand how to navigate it.
If there's one thing you want new grads to walk away with after this episode, what is it?
This can be an overwhelming topic, and there is help available out there. Ask us, but also use the information that we've given you and do interview prep with it. The biggest piece of advice I have for any new grad listening is to always ask the questions and lay out expectations at your interview and before you sign your contract, not after.
My takeaway, and I hope yours too, is this. Insurance decisions are not just administrative. They shape your entire career. And the earlier you can understand them, the more power you'll have.
If this episode helped you, send it to a friend who's about to sign their first contract or already did and is quietly panicking.
And if you want more episodes like this, real talk, no fluff, make sure you're subscribed to Project Confidence.
Be sure to like, subscribe, and follow us at Project Confidence on Instagram, YouTube, Spotify, and Apple Podcasts, or email us at projectconfidence@gmail.com.
Thanks for listening.
Bye.
Bye.